Hey Brewer here, welcome back to another video. Today I want to talk about the SPY trade that I shared out yesterday, which was the 3x4 320-316 put ratio expiring on Wednesday for a 45-cent debit. This is a slightly bearish bias position in SPY. The entry of the trade happened around the time when SPY broke down below the 50 MA on Friday, and even though the internals weren't all that bearish, I still wanted to prepare for the upcoming week in case the market gaps down and we continue to sell off and start trading in the area between the 50 MA and the 200 MA. And as you know, on Friday, shortly after we touched the 50 MA, the market bought it back up. So on that turn, I felt that it made sense to sell the 316 put expiring on Monday to collect some credit, because if SPY does fall to 316 on Monday, I'm still pretty covered by the 3 long puts at 320, and because that short put will be expiring that day, I'd have time working in my favor anyway. Alright, so that's the gist of what happened on Friday. Now, going into more detail, I wanted to talk about why the 320-316 put ratio, why those strikes, and why a 3x4. Let's talk about the strike selection first. So over here on the right, this is the composite volume profile. It basically just shows the volume transacted at each price over the time frame that you're looking at. And in this case, I'm showing a 6-month time frame here on this chart of SPY. TLDR, this is the volume at each price in SPY over the past 6 months. Important thing to note are the areas where the profile is very wide. These are called HVNs, or high volume nodes, basically where a lot of volume was transacted. And these HVNs tend to act as magnets for prices to travel to, which makes sense because the more volume that the market trades at a certain level, the more it shows that the market accepts that level as a fair price to do business, right? So you can see here that the 320 level is a pretty good magnet, followed by 310 below that, which also happens to be where the 200 MA is. Now 310 sounds pretty far. I don't know if we'll actually crash down to 310 because SPY would have to first get through the heavy congestion here at the HVN at 320. But can SPY reach 320? Yeah, very likely. That's not out of the picture and should be a good first target over at least a couple of days. And if we do get there, the 3x4 ratio should really expand, right? These 320, 316 long verticals should expand nicely and come out on top of whatever loss that this naked 316 put will have. Now, as to why I made this a 3x4, it's because I felt that this structure would survive a hard sell-off better than a 1x2, simply because, remember what I said before, the more longs that you have in front of the shorts, the more covered you are by those longs in case of a sharp move in the direction of the ratio. And as we explored in last week's QQQ Retro, the spread in terms of monetary value has the potential to make more, and you can put these thicker ratios on more confidently and size up better, knowing that you have more longs to cover those additional shorts. Because now with more longs, I'm pushing the break even further down. If we take a look at the risk profile here, the break even on this trade is pretty far, down near 304, and that's because I essentially have 3 of the 4-point wide long put verticals, each of which adds that extra cushion to the downside. And more longs also allows me to capture profits better even when it's still early on in the trade and the underlying happens to get to the sweet spot around 316. Take a moment to look at the large area of profit here over the days with a 3x4. And note the break evens. Now, had I put on the same ratio but in a 1x2 fashion, you can see right off the bat that the break even is further up and these profit areas are quite flat. You'd really have to wait till the last day for the spread to start expanding in your favor. Of course, you could have made the ratio wider as well, but then again, you'd only have 1 long put to cover the 2 short ones, which I wasn't really comfortable with because downdrafts can be sharp, so I wanted more longs in front. Okay, so coming back to the chart, seeing the high congestion zone at 320, I might feel better about selling another put below that level expiring Monday to knock down the debit a bit more. I'll have to see how Monday trades. Right now, I own this trade at about a 23-cent debit, and there's definitely time to adjust this debit over the next few days. If anything, if I don't do anything until the last day, I can always sell one of the long 320 puts back out to take in a bit more credit, and I'd still be left with 2 1x2 put ratios. So yeah, that's a plan on how I'm going to be managing the SPY trade going to next week. The 50 MA has held pretty nicely, and the internals weren't that bearish on Friday. But of course, anything can change on a dime, so watch those levels, watch how the market breaks below Friday's lows. If internals pick up the pace to the downside on Monday or Tuesday, then this trade gets more golden. If not, I'm expecting more sideways until we can break above the 20 MA. Alright, so really looking forward to next week. But yeah, that's it for today. As always, if you have any questions or comments, feel free to leave them down below, and feel free to join us by checking out the links to our Twitter, Discord, and Twitch down in the description below. It's all free. We share our thoughts and trades and setups, entries, exits, all that good stuff, all that good commentary, and all those good vibes. But for now, stay safe, Brew Crew, and I'll catch you in the next video. Cheers.